Okay, continuing in Chapter 2, we're moving on to Section 2.2, and the objective here is to record transactions in T accounts according to the rules of debit and credit. Okay, so something for you to think about. In checkers, let's say we're playing checkers, can you get a queen? No. When you're playing baseball, you hit the ball, you run around first. Do you run over top the pitcher's mound and get to third? No, you go to second, then you go to third. So the games we play, they have rules. Typically, when we learn a new game, we learn the rules first, then we play it and practice it over and over, and then it becomes easier, and then eventually we understand why those rules are there. The same is true in accounting. There are rules in accounting that we are going to learn first. Then we're going to practice and practice and practice and practice until it becomes easy. And then at that point, we should have a better understanding of why those rules are in place. Okay? So hang with me, be patient. It is going to be really difficult at the beginning, but I did give you that yellow sheet, which is kind of your cheat sheet, and we will use that for right now. So let's look at these rules. The rules are telling us which side of the T account will increase or decrease. So take a look at some of these. So look at assets. Your assets increase on the debit or left side and decrease on the credit or right side. But on the opposite end, liabilities decrease on the debit side and increase on the credit side. So those two work in opposition to each other. On the other hand, we could say revenues and capital, which are two accounts that increase our owner's equity. They're debited, or they're decreased on the debit side and increased on the credit side. So those two would work in the same way. Another example is expenses and withdrawals. Those both decrease owner's equity, and they will both increase on debit side and decrease on credit side. So there are a few different ways that we can try to group them and have an idea of what is what. But at this point, we're just going to use that cheat sheet, okay? And then in the future, we're going to do examples where you will see this play out. But just get a good look at this just to see which side is increasing and which side is actually decreasing. So the normal balance of an account, this is something we're going to talk about a little bit more in the future. Basically, the normal balance is just which side increases according to the rules of debit and credit. So assets normal balance would be the debit side. The liabilities normal balance would be on the credit side. So if you hear or read ever about a normal balance of an account, it's just talking about the side that increases. Again, we'll talk about that in Chapter 3. Just keep in the back of your mind. Two more things to discuss is balancing the equation. So amounts entered on the left or debit side of a T account must also be entered on the credit or right side of a different T account. So just like in the accounting equation, we did two things for every transaction. Two things must happen for every transaction in a T account. If something happens to the left or debit side, something has to happen to the right or credit side of a different account. Just keep that in mind. And then the last thing we're going to talk about is the chart of accounts. So this is a numbered list of all the business's accounts. Okay, so it's kind of like an inventory or a reference chart of and a number scale of what is what. So a lot of companies will have a lot of different accounts, and so they need to give them a number because accountants like numbers and they like to read numbers, and it saves them writing out a bunch of words. So if they know that their payroll tax liability is 2010, they're going to use that code or that number just to save them a little time. And so these are just examples of how you could label them or how you could code or number them, and businesses tend to have many more accounts than we have been talking about in class. So this just gives you the idea. Typically, it would be like your assets are 100s or 1000s, your liabilities are 200s or 2000s, equity is 300 or 3000, and it goes up. And there's always room for growth. So you'll see cash So these are assets, right? 1,000, 1,010, 1,020, 1,030. And then there's a lot of room for growth. So they could add other types of assets and still be able to number them. And that's it for now. So at this point, just an understanding of left and right, understanding that those rules are something that we will get to, we will learn in the future, but at this point we are just going to practice those. And there is no homework from here on out. It was just that 2-1 review quiz, and then you're good. So this is the end of this video.